Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Let's get to your top stories today. Oil prices trimming gains while U.S. futures trading little change after Israel launches new missile strikes targeting parts of the Iranian capital.
The conflict in the Middle East set to overshadow trade discussions as President Trump prepares to meet fellow G7 leaders in Canada.
And Beijing's AI ambitions taking a fresh hit as Taiwan announcing restrictions on chip exports by TSMC to the likes of Huawei and SMIC. Good Monday morning to all of you. Thank you for joining us right now. Lots to get through in the next 2 hours or so. As far as market reaction, and there just happened to be a weekend in between Friday and Monday. The big difference, as you can see, that things are a lot more stable across risk assets, including, by the way, I should also mention where we are in oil prices, which I'll get to in a moment here. But certainly when you look at equity markets, we are mostly to the upside. We are coming off highs a little bit in some of the benchmarks coming online. You have Taiwan coming online. That's a separate story. We'll get to that in a moment. S&P futures, though, did manage to shake off the early cobwebs. And as you can see now, we're up about 51%, 2s and 10s to the upside. It's the Fed week as well. We'll get to that in a moment here. Very quickly, energy, very much in focus, and gold as well, right? We're about $50 short of that all-time high. We're still higher, but as you can see, almost as I speak, we're retracing almost all of the gains. At one point, we were above 78. We opened above 78 early this morning, about 3 hours back, and as you can see, we're now at about 74.50 going into the rest of the energy complex. Stocks, though, as you can see, still up about 1% within the equity complex. That goes into what we're tracking going into the open today. Shanghai crude up 7% to the upside. Dollar China, as you can see, is 718.90, slightly on the upper end of the recent 3-day range. And we're continuing to track, of course, the weakness in the Hong Kong dollar. We are, as you can see, very, very, very near now. At 785, the weekend of the trading band. But yeah, a lot of this comes back to what we're seeing in oil prices, Yvonne.
Yep, that is still where the geopolitical price and premium is really coming back to this market. And certainly what we're seeing still is a very fluid situation. Open hostilities between Israel and Iran have entered a fourth day with no sign of easing, stoking fears of a wider war in the oil-rich region. President Trump, though, thinks it's still possible for both sides to reach a deal.
Mr. President, can you give us a sense of what you're doing to try to de-escalate the situation between Iran and Israel?
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
And John Herskovitz, our Bloomberg editor, is following the latest for us right now. John, what do we need to know?
Well, we've seen our third straight day of fighting. We saw Israel conduct attacks on Tehran, a gas field, and vow to continue its attacks to destroy Iran's nuclear program. Iran has retaliated with missiles and drone strikes, some of which have hit civilian populations in Israel, and neither side is shown any signs of willing to back down. So both sides are keeping up. With Israel, they have shown that they have air superiority. A lot of the air defenses in Iran in certain areas appear to be weakened. And for Iran, they're doing what they can to attack. So the fighting is going on, and of course this is creating worries for wider war in markets. Oil prices are going up. There has been no signs of de-escalation, which is just creating worries in markets and around the world.
And those talks were canceled in Oman on Sunday as well, John. In terms of the U.S., where does the Trump administration and the U.S. stand in all this right now?
Sure. As we saw in the clip, the Trump administration is saying that the deal could be reached. There may be a need for more fighting until that can happen. The U.S. has denied involvement in helping Israel, but Trump didn't rule it out, especially with going after Iran's nuclear facilities. So we have this, and we have Trump heading to the G7 in Canada, where there's going to be more disagreement, discussion about what goes next with this. The worries are of whether there'll be U.S. involvement in this, whether Iran will target U.S. military assets in the region, something that they've indicated that they could do, and whether this would mean U.S. involvement. So we have a lot of things coming from Trump. We have a lot of worries for the U.S., and we have the G7 going on where this will be a main topic of discussion, and we may see disagreement, we may see some cooperation. There are various points of view that are going to be considered as Trump goes to the talks in Canada.
John, thank you. John Herskovitz there, our Bloomberg editor with the latest. Let's bring in Bilahari Kausikan, a distinguished fellow at the National University of Singapore's Middle East Institute. He's also a former permanent secretary of Singapore's Ministry of Foreign Affairs. Thank you so much, sir, for joining us. You know, it seems like there's no sign of easing right now between the two sides. Do you see any sort of reason or anywhere in the time frame right now where the two sides can de-escalate from here?
I don't think either side wants to de-escalate right now. They will continue for some weeks. Israel is determined, if not to completely eliminate Iran's nuclear capability, to delay, degrade it, and doing so by not just going after the nuclear facilities, but by destroying large numbers of the Iranian leadership, senior leadership, destroying its oil infrastructure, its power grid, so that, you know, even if the centrifuges are not destroyed, they become meaningless. On the other hand, Iran is in a terrible dilemma. It has already been exposed as completely ineffectual during the Gaza war. Its so-called axis of resistance has fallen apart. Israel has achieved air dominance over Iran. It has demonstrated that the Iranian system is totally penetrated by Israeli intelligence. And this has weakened the regime, and it cannot afford to appear even weaker. Yet its options are limited. What can it do? It has fired hundreds of missiles, ballistic missiles at Israel. It has caused some physical damage, but relatively few casualties and fewer fatalities. Israel air missile defense system seems to have stopped about 90% or so of Iranian missiles. So I don't think either side is ready to stop yet.
Right. I guess I want to get a sense to what extent the ability of Iran to retaliate has been handicapped by, to your point, right, ineffective already before the last 4 days or so, perhaps even more so because of all the attacks over the weekend. And I now wonder whether or not, inevitably, this will be a de-escalation because Iran can't respond in kind.
Well, look, Iran's conventional defenses have been exposed as ineffectual even during the Gaza war, before the last 4 days. And the last 3 or 4 days have further degraded it. I think I've read somewhere that Iran has 3,000 plus ballistic missiles, and maybe a third or more of that has been destroyed or expended. So they can go on for a little while. They cannot afford to surrender without a fight. Otherwise, the regime is at risk. But Israel can afford to go on much longer. And to Israel, Iran acquiring a nuclear weapon or getting close to acquiring a nuclear weapon is an existential threat that they cannot be tolerated. And that is also an existential threat, not just to Israel, but to the Sunni Arab monarchies. So I think this war is going to go on for some time more until Iran's capabilities are even further degraded, even if not totally eliminated.
Bilahari, at what point do you think this drags the U.S. into this conflict right now? What role do you see the U.S. playing?
Well, I think there are two scenarios, right? One, if the Iranians, in desperation or out of foolishness or miscalculation, start to attack U.S. assets. President Donald Trump has already promised or threatened a response like nobody has ever seen before. Now, that's one scenario if Iran makes a mistake and attacks U.S. assets. All right? Then U.S. will join Israel in attacking Iran. The other scenario is every war must end. And I think this will end with a Hobson's choice for Iran. Do I surrender to Israel or do I surrender to the US, which is least acceptable? So I think President Trump is not completely wrong when he says there is possibly a role for diplomacy, but they will have to fight it out for a bit longer until Iran faces this option choice.
Bilahari, two major things are, let's call it tail risks for markets. They're worrying about two things. One is this escalates beyond the region, that's number one. And number two, within the region, if we do see a closure at the Strait of Hormuz, do you see any scenario where we get to those two?
I don't think it's going to escalate beyond the region. Right? This is a regional war. It will stay a regional war. Who are Iran's extra-regional allies? Russia is hands full in Ukraine. China's strategic or political role in the Middle East is largely performative. They are in no position to substantively help Iran. It could, however, escalate within the region if Iran is foolish enough to attack either American assets or Saudi energy infrastructure. And that would include trying to close the Strait of Hormuz. That will immediately bring the US into the equation, I think, as well as other Western countries. And I don't think Iran, and that will even worsen Iran's situation, I don't think they are that foolish. Not yet. They are not desperate enough yet, and they are not foolish enough, I think. So I think the risk of it escalating beyond the Middle East is practically non-existent. The risk of it spreading within the Middle East is not zero, but right now I think the probability is not high either, unless Iran gets very desperate or totally miscalculates again.
Bilahari, thank you so much for the time. Sir Bilahari Kausikan there, former Singaporean diplomat. He's also a distinguished fellow at the National University of Singapore's Middle East Institute. Cutting down to the open of trade, 18 minutes away. Equities are slightly to the upside. Oil is still up, way off highs at the day. Dollar is mixed. We're stable going into the Monday session. 17 minutes away. This is the China Show.
We are looking at live pictures out of Tel Aviv here this morning, where we are actually seeing from the Israeli Defense Forces a confirmation that identified missiles were launched from Iran towards Israel. That was coming through about 7 minutes ago. And then state TV in just the last seconds here saying that Iran has fired a new wave of missiles at Israel. So we are seeing that retaliation early this morning there in Israel from the Iranians. And certainly there has been a lot of questions of how long of a protracted war could we see between the two sides this morning, Dave?
Yeah, just gone past 4:15 in the morning, as you can see there in Israel. And I think if you're just joining us right now, a couple of seconds ago, the live shot that you saw actually did manage to capture what looked to be some of those missiles that we just talked about there. So this is a developing story still. As it pertains to markets, more stable, yet you get a sense that we're still a bad headline away from, again, this picking up a little bit even further. Jeff Ng joins us right now, head of Asia Macro Strategies, SMBC. Jeff, thank you for joining us today. Lots of moving parts. We can get to what's on the agenda, what we know is on the agenda this week in a moment. We have the Fed, you have the BOJ. I know you guys expect still a weaker dollar ahead, but just give us a sense of how what's taking place in the Middle East is to some extent complicating the matters for markets at this point in time, Jeff.
Good morning and thanks for having me. I think while we're expecting a weaker dollar that will come in over the coming weeks and months, I think this current geopolitical development is complicating matters. So we are likely to see the dollar perhaps see some near-term rebound against some of the other currencies, for example, the euro. And I think there could be also a flight to safety. So some of the safe haven currencies could continue to benefit in the light of this geopolitical development. Near-term implication is that there could be higher energy prices. So that may spark a wave of commodity reflation. Because so far what we've seen for now is that food and energy inflation has been relatively low over the past few months. And right now, there could be some potential rebound if the energy prices stay high for some time. So that could cause some complication into currency developments.
How long-lasting do you think these moves are going to be, Jeff? I mean, that certainly is a big question. But this is coming at a time when we are seeing equity markets quite resilient to a lot of the trade headlines here. But how do the prospect of more geopolitical uncertainty, how does that lead to, and where does that leave risk assets moving forward?
Sure. I think so far the markets are still relatively comfortable that the geopolitical conflict could be limited. But I think as the previous speaker has also correctly identified, there could be some potential risk of some strategic miscalculation, or the conflict can also be extended. So I think once markets start to price in this conflict being extended, or some strategic miscalculation, or you can see some sort of like increases in the commodity prices, I think that could cause markets to then take more, weight into what has been happening recently, and I think that could cause more uncertainty in markets going forward.
Jeff, what does it mean for demand for havens? And maybe just a second follow-up to that would be, Treasuries, U.S. Treasuries specifically, haven't really acted as havens of late. Do you think Treasuries will remain low on the list of havens for markets? And what does it mean, I guess, to the other point I was making on gold, for example?
Yes, certainly. I think some of the safe haven currencies that we think that could do quite well will include, I think, the Swiss franc, gold, I think, has been traditionally a safe haven asset as well. And I think in the region, the Sing dollar could be also performing relatively well in the light of this current development. Now, U.S. Treasuries, turning to that topic, I think there's still some concerns about the credit quality and the long-term credit worthiness, perhaps coming from the big, beautiful bill itself, and perhaps the long-term implications of higher debt ratios in the US, and how that may weigh into some of the rating agencies going forward. So I would anticipate that the outlook for the US Treasuries will be a bit more complicated. It could also be determined by perhaps the next Fed potential rate cut, which we think could happen as early as September, or maybe it could be delayed, or it could also depend on other factors like the credit worthiness and the credit risk.
And the big sort of headline event, apart from what we're seeing right now in Israel and Iran, Jeff, is the Fed. And bring it back to where markets are really looking at. I mean, obviously there's been pressure from President Trump for Jay Powell to cut rates, but it looks like they might be holding steady for this meeting. What are you looking out for in this one in particular?
For this coming meeting, we don't expect the Fed to cut. I think they will likely remain in a wait and watch mode. I think what we are watching out for is the summary of economic projections, whether there are any changes. Because what we have seen over the past few months is that PCE has been coming within or below expectations, so there could be some adjustments lower, even with the geopolitical situation still being pretty fluid. But I think the policymakers may have taken the past few months into account, and perhaps the trend going forward that could cause the numbers to be adjusted. And I think that may set the stage for rate cuts later this year, especially if inflation doesn't rebound. And I think if the situation is appropriate, and perhaps as the Fed considers the real indices, the economic data, if there's any deterioration to retail sales data or industrial production that's out later this week or in the coming few months, then there could be more cases for rate cuts.
All right, Jeff, thank you. Jeff Ng there, head of Asia macro strategy at SMBC. As we were talking, we're still looking at those live pictures out of Tel Aviv, where you are actually seeing what has been reported, right? Missiles that have launched from Iran to Israel there. We're starting to track kind of what we could hear from world leaders. Ursula von der Leyen has been talking to and mentioned that she did speak with Benjamin Netanyahu, the Israeli prime minister, today. And they mentioned sanctions are critical when it comes to pressuring Russia. But they've already been talking a little bit more about what this means in the Middle East here. But yes, in the last few minutes, we have heard from state TV that Iran has fired a new wave of missiles at Israel.
Yeah, and while that's taking place, the move across these markets right now, following the extreme moves on Friday, has really been one that's priced out ever so slowly, risk premia, going into the thick of Monday right now. So just case in point is oil, where that focus has very much been centered. Oil prices are now trading at about session lows, still slightly higher for the day. We'll continue to keep on top, of course, of literally developing story out of the Middle East. Plenty more ahead. This is the China Show.
in terms of your agenda here today, of course, we're still waiting for that data dump for May in China. That is going to be our top story there at the top of the hour. And we're still looking for maybe things to tread water, right? No trade boost yet, according to Bloomberg Economics on the data here today. New home prices come out in just about 6 minutes' time. The president is in Kazakhstan, so we're watching what he says there. But really, it's all focused on the Middle East right now, right? So crude, energy stocks very much in focus. SMIC, well, we saw that Taiwan move there to restrict curbs, or at least expand those curbs on Huawei and SMIC. So we're watching some of the domestic players here today. And of course, Hong Kong dollar weakness is still a lingering theme here too, Dave.
Yeah, we're a few ticks away from the weak end of the trading band. Coming through as well is U.S. futures, just to give you a sense of the mood music across these markets going into the open today. So U.S. futures are doing this. And of course, we also did get the credit numbers on Friday. Just about a miss almost across the board. You have new local currency loans. You have aggregate financing, which puts everything together. And of course, money supply coming in below 8%. That's M2 specifically. Right. U.S. futures, European futures were down actually last we checked. So still some weakness. And of course, when you look at the markets here in Hong Kong, we are about half 1% to the downside. Yvonne was talking about SMIC, which should be coming up on your screen shortly towards the bottom there on the back of news coming out of Taiwan on the weekend. Do we have that? Can we find that, please, if we can? We're down 1% on SMIC on Monday. Right, U.S. futures, there we go. Thank you so much, finally. Okay, and Brent crude is still looking at some gains right now. Fix uneventful. So generally a mood of risk off going into the opening session today here.
Yep, so stocks to watch. We talked about the oil stocks in particular, where we're focusing on where we're seeing. Now, we talked about energy prices right now. We've kind of stabilized a little bit in the Asia session here, but of course, we're watching very closely. Some of the likes of Sinopec and CNOOC are still up this morning. PetroChina and China Oil Services are up some 2%. So certainly there is still some movement in price action across some of these energy players here today. And we're also watching the likes of the biotech stocks, because there's been a lot of talk about this renaissance that we're seeing there as well. Biotech, WuXi Biologics, I should say, there's going to be a share placement there today at 26.60 Hong Kong dollars each. So we're watching very closely that stock in particular, Dave.
Yep, absolutely. Okay, watch this. Live TV, folks, coming up very shortly. Here we go. Going into the open today, so before we get the housing numbers coming through, the activity numbers coming through, this one actually updates in a couple of minutes or so. So currently 23 straight months of month-on-month declines. We'll see what this looks like, including the open. That's coming up next. You're watching The China Show. Right, we're going into the opening bell today, but before we look at markets here, just an update of what's the latest out of Israel and Iran, where it's just gone past, at least in Israel, 9:30 a.m. in the morning here. So we do understand, based on state TV from Iran and also the IDF, that missiles have been launched from Iran towards Israel. If you're just joining us right now, we did show you live pictures about 4:15 in the morning, where you did catch a glimpse of several what looked to be those missiles there, which Iran state TV is describing as more crushing than before. We'll keep on top of the story, but in the meantime, we're also looking at the open here today, Yvonne.
Yeah, the key question is, right, how far is Iran going to take this against Israel to a point that it might drag the U.S. into this war and jeopardize the relationships and these new improved relations with some of the Gulf states? That's the key question here. But we'll see how, what they're targeting at the moment when it comes to these missiles that we just saw in just the last couple of minutes. But it certainly continues to be a fourth day of uncertainty geopolitically here. Take a look at the open here in China. We're still waiting for that data dump right at the top of the hour. New home prices coming through any second now. We'll get you the latest on that front. But the data, we'll see if it actually moves markets here today. It seems to be very headline driven, what we're seeing in Iran and Israel here at the moment. But we're seeing onshore markets are slightly seeing some pressure here this morning. Key to watch is still Shanghai crude. Playing that catch up here, we're seeing a pop of 5% in Shanghai, and those futures are concerned. And already, though, if you take a look at WTI and Brent, we are off some of the initial sort of peaks there already that we've seen in the last 48, 72 hours. So at least right now, things have stabilized a little bit when it comes to the crude price. Hong Kong is doing this. More downside here when it comes to tech this morning. We're down about 0.9%. 8 shares are off, right? But we're still sort of talking about bull market territory in that benchmark. But it seems like tech certainly is getting hit here this morning. So risk assets still very much in the forefront and getting that pressure. Alibaba down some 1%. Meituan down 1.5% or so right now. So that's going to be key to watch. In terms of movers, it's really going to be the oil majors and the like here. We're watching very closely what happens in the energy space here. But Dave, I believe you have those new home price data coming out in your terminal right now.
Yeah, not very encouraging. Let me start off with new home prices. This is for the month of May here. So we're looking at negative 0.22%. That's month on month. So it is, well, not just a faster drop than April. That's number one context. The other one is when you take it back all the way this year, that should be at 0.22%, the fastest drop month on month across the board. That's 70 cities. Of course, there's nuance and context within that data set. Fastest drop in 2025. Used home prices are down 0.5%. Also, Yvonne, faster than the drop that we saw for the month of April. Again, May data, new home prices down 0.22%. Used home prices down 0.5%. We're seeing a little bit of strength coming through in the Chinese currency. We'll unpack the story, of course, later on with more economic analysis coming out of mainland China. But before that, back to oil, Yvonne.
Yeah, it seems like we haven't seen that bottom, right, in the property market in China just yet. But you take a look at how oil, and really it's the oil majors that we're seeing in China, and now that is basically following through what we're seeing for most of some of the regional energy players here today. We are seeing a little bit of upside in some of these stocks here, but really we're kind of broaden it out and really talk about what's at stake here right now, because the biggest fear in the oil market right now is this map we're about to show you, right? Everyone's talking about the Strait of Hormuz and the potential blockage of this area. Now, this is what we're talking about, right? Just really close to where Iran is. And this is this very narrow pathway, but we're talking about a fifth of the world's oil output a day goes through this area. So certainly this is what people are most concerned about, right? Obviously right now it still seems to be the most bearish, most extreme case if Iran decides to block this area. And if they proceed to do so, though, the big concern is that oil prices are going to hit above $100 here right now. And you're seeing that angst in some of the options markets, that spread between WTI and Brent as well. And you're also seeing it in what we're seeing in WTI implied risk premium. You look at what we saw just last week, that premium was about $6 in just 1 week. We've seen that surge about $5 here, $11.50 here. Keep in mind, though, let's put into context, the average that you're seeing from 2016 to recently 2025 has been around $8.65. So we are actually above that average here right now. But when you take a look at what the peak was back in March 2022, so shortly after Russia invaded Ukraine, that peak was at $58. So we're far, far, far from those levels. But Bloomberg Intelligence's Henry Fung had a pretty interesting take on this, Dave, right? Yeah. If we actually reach those peak levels or even get close to what we saw back in 2022, we could be seeing WTI back to levels at 125, I believe, is his forecast based on a fair value of $67. So basically against this backdrop, he's saying, look, oil prices could stay elevated for the short term, and that's even despite if OPEC Plus continues to raise output in August.
Yeah, absolutely. I think, if we do get to a scenario where we do see that premium added on top of the spot price and even the futures curve, right? I don't think oil at 130 is the thing we need to be worrying about in that kind of scenario. I think the other guest we had earlier on at the top of the show just mentioned that as well, right? In a scenario where we do see the Strait of Hormuz closed, that's when they think the U.S. steps in, because that becomes a little bit too disruptive right now. Let's get a sense right now of commodities themselves. Daniel Hynes, Senior Commodity Strategist at ANZ, joining us right now. Daniel, I mean, it's one of those things where we're giving out scenarios, but we're not sure, of course, if we do get to those scenarios. But just help us understand where your head is right now when you look at the oil price.
Yeah, look, I mean, I think the situation for the oil market has clearly changed. So I get a sense, certainly over the last 18 months, that the risk that the market was applying to supply disruptions was diminishing, and that's been an actual trend over the past 20 or 30 years. Really, we've seen these major geopolitical events have less of an impact over a shorter period of time. Certainly in relation to oil prices, considering, I suppose, the lack of real supply disruptions that we've seen. So while clearly the risks are suddenly elevated, and certainly there are a lot of, as you said, scenarios that could potentially play out here in the shorter term. My overriding sort of feeling is that yes, we'll see a spike, but I think the environment is a lot different to what we've seen even sort of 2 or 3 years ago, and I suspect the market can handle it a little bit better this time around. So for me, yeah, that risk of $100 plus in oil is certainly a lot lower than maybe what we would have been facing even a few years ago.
So you think maybe $100 oil unlikely, but you mentioned it's hard for us to get back to $60. Is that the sort of range that we're looking at right now, Daniel?
Yeah, no, I think there's certainly been the market hasn't really been applying any sort of significant geopolitical risk premium, I think, over the past 6, maybe even 12 months. And, this obviously raises the risk. And clearly, as we said, there's scenarios playing out where we could see some disruptions to the oil market. So there has to be some sort of risk premium applied. But and I think, look, they've been a little bit lax in I suppose, assessing those risks around Israel and Iran. So I think this latest sort of event, will jolt them back into reality. And I suspect going forward, we're going to see a sizable risk premium priced into the market. So for me, that certainly puts away, I suppose, the risk of that sub $60 that we were actually forecasting not that long ago. Where it ends up, I suppose, in the shorter term will be driven by what Iran does essentially around this latest conflict.
Yeah, Daniel, so clearly there needs to be some risk premium. Now, we don't know, depending on what happens, certainly with developments on the ground, but what would be, Daniel, would you say, what would be the tail risks that markets need to consider now that were crazy thought just this time last week?
Well, I clearly believe there's now a risk that Iran's regime could topple. If Israel is determined to drive that as a focus, then we could see oil severely disrupted as a result of that. So that would clearly be a worst case scenario, and under that sort of proviso, I suspect you'd see Iran really retaliate aggressively without any thought, I suppose, to the consequences. And that brings into play a whole lot of oil, broadly across the region. So, that while limited sort of possibility, clearly would present a pretty sizable risk to oil prices pushing above that $100 a barrel.
Daniel, we got about 20 seconds left. Gold prices at a record. We're above 3,400 now. Where to next for gold?
Oh, look, I think the risk or haven buying, essentially, that we'll see emerge from this will replace some of that buying that had been sort of subdued a little bit due to easing trade tensions. So I do think we'll see record highs in oil. This will really rattle the market, and they'll really be looking for some safe haven assets, and gold fits that bill perfectly.
Daniel, thank you so much. Daniel Hynes, Senior Commodity Strategist at ANZ, with the latest there on his take and the sort of the gaming out of scenarios that we need to consider at this point in time, given just the fluidity of the situation over in the Middle East. Now, part and parcel to the story, of course, is really what the U.S. says and what they eventually will do. You have President Trump. He's headed to Canada. There's a G7 summit there, world leaders. Certainly this conflict in the Middle East looks set to overshadow hopes for progress on the separate story that we haven't even gotten to today, which is the trade conversation. David Gura, our Bloomberg correspondent, joins us, in fact, right now in Alberta for us to give us a preview of what to expect this week. David, we're all yours. What are you tracking there?
Well, certainly this conflict in the Middle East is casting a huge shadow over this agenda. Not the official agenda, but it's what everyone here is talking about. And we've seen as world leaders have made their way to Canada conversations among them, statements issued about this conflict, and we have yet to see sort of if there's going to be any kind of cohesive statement among these G7 nations and other leaders, a message, a unified message about that conflict in the Middle East. So we'll look for that, but I should say that would not be in keeping with what we were said to expect here going into this summit. Everyone here remembers what happened in 2018, the last time the G7 was in Canada. Donald Trump ripped up the communique and left in a fit of pique and had a lot of criticism for then Prime Minister Justin Trudeau. Nobody wants that to happen this time around. So there's a lot of kind of delicate dancing in terms of what is on that agenda, what folks are talking about. I should say Ursula von der Leyen, the president of the European Commission, is speaking right now, and she said this summit's going to be defined by two things, geoeconomics and geopolitics. So trade is something else that's, again, not on the official agenda, but a huge focus of everyone who's here. And there was some expectation before things erupted in the Middle East that we could see some agreements between the U.S. and other trading partners come out of this summit. Maybe not concrete, detailed deals, but kind of frameworks for them like we saw with the U.S. and the U.K. I should say expectations for that have been scaled back dramatically, but the EU's head of trade policy is here on the ground in Kananaskis, in Canada, ahead of this summit. So those conversations, I suspect, will continue among these world leaders on the sidelines.
Yeah, you mentioned there's a lot of things that could happen. Tell us where, I mean, it's interesting even just the location of where this G7 is in Banff, a beautiful backdrop behind you. But tell us a bit more the significance of that, because it seems like, you know, they wanted to host somewhere with a bit of a more neutral ground in case of what happens.
So the first thing you have to understand is just how wide this geography is. So there are parts of this that are taking place in Calgary. That's more than an hour from here. Kananaskis is where the world leaders are gathered at a very small resort in a very hard to get to place. And then there's more happening where I am in Banff. But it's that central point in Kananaskis that's so critical here, because you have this small group of world leaders. Yes, those of the G7, but other nations as well that Mark Carney, the Prime Minister, has invited to attend here, including Narendra Modi. They think that in that setting, in that small group, they can have the kind of frank conversations that will lead them to come to some kind of agreement on various issues. Again, I go back to what I said about that joint communique. No expectation here that these 7 nations are going to emerge from this summit with kind of a unified statement on all of these fronts. There's just too much disagreement. But maybe the thinking goes, if they're in this very remote, small place, in a very elegant hotel for a number of days, they'll be able to have those conversations on the sidelines. That will kind of improve the level of comedy among these nations. We'll see if that happens, but that's certainly the hope and the expectation of Canada's fairly new Prime Minister, Mark Carney, who really wants this to go off without a hitch.
David, great to have you back on Asia Programming there. David Gura, our political correspondent, joining us there live from Banff, Canada. Plenty more ahead. This is Bloomberg.
Welcome back. We're looking at Chinese chip stocks, and certainly one eye on focus there. You had over the weekend Taiwan updating this list, imposing export controls, and that list now includes Huawei and SMIC. Now that means that tech giants will be further restricted from accessing the tools needed or necessary to build AI semiconductors. For what this means, what was announced over the weekend, our tech correspondent, of course, Bell, is with us right now to take us through another blow here for China's tech ambitions.
Yeah, well, I mean, those two names that you mentioned, Huawei and SMIC, they're really at the center of China's efforts to try and build out its semiconductor ecosystem. So this is definitely something that's a damaging move. But essentially, just to give the context here, Taiwan maintains a so-called strategic high-tech commodities list. And so on that list, it has names or entities or groups that are considered or could be considered bad actors. So names like Al-Qaeda, for instance, or the Taliban. That now has been expanded to more than 600 names, and over the weekend, SMIC and Huawei were included on it, plus some of their subsidiaries. So what that means is if you're a Taiwanese semiconductor company or any Taiwanese company essentially that's looking to sell to these names, you're now going to ask or need to ask for government approval. And really these names have been blacklisted in essence. So it's been very damaging, especially for a name like Huawei, for instance, because back in 2023 we were reporting at Bloomberg how they were managing to find these workarounds to still access this technology. Be interesting to see if this move actually has the intended effect of cutting them off.
And it's a bit unprecedented, right? Because before we've seen blanket bans on certain equipment, but this is actually names of Chinese companies that are being included in this list.
Yeah, so this is a real first for Taiwan, exactly. They had the blanket bans, now they're actually targeting or going after these specific names themselves or these companies. I think it's interesting to sort of note the dynamics of this as well, because you've got not only rising tensions between Taipei and Beijing, and you saw Lai Ching-te, for instance, the Taiwanese president this year, coming out and saying that China was a foreign hostile force for the first time ever, looking at these different measures to try and counter the infiltration efforts. But at the same time, you've also got the negotiations ongoing between Taipei and Washington. And we know that Taiwan wants to put the best foot forward with the US. It's interesting to note sort of the timing of that, given these negotiations are ongoing. But yes, as we said, Taiwan adding Huawei and SMIC to its entity list, so going to be restricting those local companies in Taiwan from shipping to them without government approval.
All right, Belle, thank you. Annabelle Drewler's there with the latest on that. And of course, we're watching New World as well. It's a pretty crucial day for the property developer. They need to pay more than $5 million in interest that's due on a dollar bond, and a default can be triggered if the payments are not made within 14 days. For more, let's get to our China correspondent, Min Min Lo, with the details and how concerned investors should be on this.
Yeah, I think they're pretty worried right now because just last month, New World had announced that they were deferring payments for 4 perpetual bonds that were due this month. And for the bond payment that is due today, that's for a regular bond that doesn't have the option to defer payment. So failure to pay within that 14 days grace period could trigger a default. And this is a 5.88% dollar bond. It's now trading at about 65 cents on the dollar, which is pretty distressed. If it's below 70 cents, we consider it distressed. And the company, the good news is that over the weekend, it's managed to raise some funds by selling 138 apartments within a few hours by selling them at a discount. And New World is also in talks with banks. They have been for many months. They're trying to close this refinancing deal with over 50 banks. They've gotten written commitments for about 78% of their target for now. So that's critical to watch. If they are able to secure that refinancing agreement, that will be critical for their short and mid-term horizon in terms of their ability to pay back their interests.
And does this remain mostly still a New World story, or is this broader sort of ills across the sort of Hong Kong property sector?
Yeah, actually, the Hong Kong property sector now is getting a tailwind from the lower interest rates because HIBOR is now the lowest in 3 years. And according to Bloomberg Intelligence, if mortgage rates fall below 2%, it could spark this rebound in home sales to a 6-year high. But of course, the property market has not been doing well for some time. There is still a high level of inventory. There is the trade tensions that could cause uncertainty, cause people to hold back on investing in property. But Bloomberg Intelligence says that still it's more important for developers to be able to borrow than to deleverage at this point, and at least that lower interest rates could provide a cheaper funding alternative to the dollar bond market.
Yeah, I mean, to your point, transactions have gone up on the weekend, but at a discounted rate, of course, there. Min Min Lo, thank you so much, our China correspondent there. A brief look at what is moving and consistent really across these markets is gold and the haven play there. You have spot, you have futures, and we're about 50, 60 bucks, and an all-time high on spot. And the way this is actually showing up in Chinese equity markets is the next board coming up on your screens, whether the miners themselves or the jewelers selling the actual bling, Chow Tai Fook, Look Fook, and the miners on your screens. Plenty more ahead. This is the China Show.
You're looking at earlier pictures that we saw in Tel Aviv there, where the state TV had talked about and reported about Iran launching these missiles in Israel overnight there. As we enter a 4th day of conflict between the two countries, no sign of easing just yet. And now the fear is that this could be stoking into a wider war in the oil-rich region here. The conflict has already resulted in significant casualties and damage. So far, we've heard 224 people killed in Iran, 14 people dead, and around 400 injured in Israel. That's according to government reports, Dave.
And we'll keep on top of the story. I mean, in case you're just joining us right now, these pictures that we're showing you right now, in fact, just taking place in the last 40, 45 minutes or so. So these are fairly fresh and underscores the developing nature of the story at the time of the day where it's barely, we're almost just only at 5 in the morning there, Monday in Israel, right, in Tel Aviv specifically. Right, let's have a look at, well, the market iteration of the show. We showed you gold. We talked about oil at length. We're looking at some of the defense stocks related across the region. And as you can see, these are some of the South Korean names that are seeing some upside, in some cases, substantial upside in Hanwha Systems, up about 20% on the back of the storyline that underscores what is taking place over there in the Middle East. Very quickly, let's flip the page, please, and have a look at rare earth stocks in focus as well. And we are seeing a little bit of gains there as far as that is concerned. And again, this takes it back to the trade negotiations taking place. And certainly the headline here is that we have yet to see, of course, that being addressed. That's according to reporting out of Reuters. The broader read across equity markets, about 25 minutes into the session here, is we're stable to slightly lower. Currency markets are relatively well behaved. Energy markets are still seeing some upside, although I think the point we want to make is that the peak that we had in Brent, for example, that we hit back on Friday is about still quite some distance away from current levels, $3 or $4 a barrel away from that point in time.
Yeah, China activity data is coming up. That's the next thing to watch here for these markets. And after we saw in the new home prices there, and those drops faster than the previous month, we'll see what the rest of May shows for the economy. BNP Paribas chief economist Jacqueline Rong will join us next.
Good morning. Welcome back to the show. We're going into the second hour of the China show. In a couple of seconds, we'll be getting the activity numbers for the month of May. Before we get to that, the backdrop here is when you just look at data since Friday, credit numbers coming in slightly below expectations, almost across the board, not completely. And in about 30 minutes back, the home price numbers coming through as well, showing that the economy, while it's stable, is not showing strong signs of a recovery just yet.
Yep, and the activity data is going to be coming through any second now. Bloomberg Economics thinks you might not see any sort of benefit from this trade truce just yet in these numbers, that this might take a bit longer to really show up when it comes to production and the like here. So certainly that's the thing to watch here. Of course, we're still focusing on the geopolitics and what we're seeing in Iran and Israel. But here you go.
There we go.
The latest when it comes to the activity in May. Oh, retail sales, Dave, a bit of a surprise, 6.4%. This is beating expectations and rising further than what we saw the prior month as well. Industrial production, that is a miss, though, 5.8%. The economists were expecting a 6% print here. What else are you seeing here right now?
Well, the retail sales stands out immediately. This looks to be an absolute blowout number to the upside here. So 6.4% should take this back all the way a couple of years as far as the fastest pace of growth for retail sales. Just to underscore also how far above the expectations this was, the very top end of forecast coming in from Capital Economics at 5.5%. So 6.4 is almost a full percentage point above the very top end. But as Yvonne is pointing out, the rest of the data set largely underwhelming, underscore perhaps the need perhaps of either more patience or more stimulus coming through.
Yeah, fixed asset investment came in also a miss, 3.7%. The jobless rate, though, is at 5%. So that has actually ticked lower. Property investment, though, continues to be in the doldrums, right? We're talking about a 10.7% contraction there. And residential property sales also falling some 2.8%. So basically, as you mentioned, retail sales, the standout, everything else was a miss.
Yeah, there we go. Let's bring in Jacqueline Rong, Chief China Economist at BNP Paribas, joining us right now to talk us through this. Jacqueline, why don't we start with the retail sales number, 6.4%? That seems to be the standout so far. What do you suspect was behind this big pop in that specific metric?
Well, I think the retail sales growth got a boost from the extension of the 618 online shopping festival, because in past years that this shopping festival mostly happens in the month of June, but this year it happens earlier. So at least the retail sales in second half of May actually received a boost from this shopping festival. I think we saw the similar story playing out in October last year, because that year that the retail sales growth also picked up quite notably, also because the Double 11 shopping festival was extended into second half of October. But we think that effect is going to weigh in June, and retail sales growth is likely to fall back this month.
Okay, maybe not sustainable. But Jacqueline, it's interesting, right? When we talk about the consumer sector, there's so many interesting new sectors within the sectors now, right? I talk about Labubus, like Pop Mart. I take a look at Laopu Gold, where you're seeing these emotional consumption as a theme. How supportive do you think those kind of subsectors are for the overall recovery of the consumer?
I would say, despite the quite downbeat overall picture of consumption and China's macro economy, there are some bright spots. As you just mentioned, that we have seen a broad consumption downgrade story, that people started to buy less practical goods like luxury goods, and they started to buy something that make them feel emotionally happy, like more toys and more Labubu. So these are some bright spots in subsectors, but as an economist, if we take a look at the overall picture of consumption, we think it's still quite downbeat, especially relative to the run rate we saw before the pandemic.
Right. Jacqueline, just to also bring in the trade negotiations element here, and, we're getting extremely close again to by the time we know it, we'll be at the end of the 90-day pause. And I wonder what your assumptions are for what the effective tariff rate will be for the foreseeable future. And what does that mean really for stimulus?
Okay, so we think now the effective tariff rate that the U.S. is levying on China is around 45%. And we think this 45% will probably be maintained even after the 90-day trade truce, because on the U.S. side, I think President Trump is highly concerned about the inflationary impact of higher tariffs. And at the same time, higher tariffs is definitely going to produce some repercussions on U.S. financial market, which is definitely not welcome for President Trump. And also the trade negotiations in the past few weeks, including the phone call between President Xi and President Trump, seems to have some positive developments. So we think in probably 90 days that the existing 45% tariff will be maintained. And that means we estimate this 45% tariff will roughly knock off 0.6% from China's annual GDP growth. That means probably in second half this year, especially after July's Politburo economic meeting, probably the policymakers will roll out some additional modest fresh stimulus, both monetary and fiscal.
And what does that tell you? If we maintain 45% effective tariff rates, are the challenges of the economy more external and what we're seeing from the U.S. and Trump administration? Or do you think, given what we saw in the home price data just now, given we see the deflation that we persist in the economy right now, are those threats still internal?
Yeah, I would say the biggest challenge definitely comes from within, not from outside, because it is true that because of the much higher tariffs that China's exports to the U.S. has plummeted, but China's exports to the rest of the world, which represents 85% of China's exports, have been holding up very steady at around low teens growth in the past 3 months. So if you take a look at overall export growth, especially in volume netting out price factors, that in May, we estimate export volume growth was around 9%, which still outpaced the growth rate of other pockets of the economy. So we don't have serious concerns about exports, but I definitely agree with you. We think the deepening downturn in the property sector is definitely producing a larger repercussion on economic growth. And another factor that really concerns me is actually the deepening deflation across the board in China.
Yeah, I mean, Jacqueline, since you brought it up, we did get the new home price numbers about 30 minutes back, and I think it's now 2 straight years, 24 straight months that we have seen, I think the overall number at least down month and month. And it seems, and what I wonder what you're seeing in the data, it seems that the weakness has somewhat accelerated in May. What are you seeing as far as high-frequency numbers are concerned?
Yeah, we do think that after 6 months of brief property recovery, that the recovery momentum in the property sector started to weaken from April, and unfortunately, the decline deepens in May. We think the property sector goes both demand and supply issues. So on the demand side, the biggest constraint is definitely very, very downbeat consumer confidence, and also very downbeat expectations for income and the slacks in the job market. And on the supply side, we have inventory issue in the primary market. If we take a look at, say, the inventory digesting cycle, say, in Tier 2 cities, now it's around 36 months. And while the prior property downturn back in 2015 and 2016, the digestion cycle was around 20 months. So that highlights the pressure from inventory in the primary market. And also in the secondary market, if you take a look at the listing across Tier 1, Tier 2, and Tier 3 cities, they continue to hover at a quite elevated level and continue to increase. So I'm afraid the downturn in the property sector will not come to an end anytime soon.
We heard from the Premier, Jacqueline, on Friday about the pledge to make the real estate market, quote, stop declining. The last time that was mentioned back in September, we heard about more stimulus. What are we likely to hear next time, if any?
I would say before the Politburo economic meeting in late July, some Tier 1 cities like Beijing and Shanghai, following the heels of Guangzhou, might relax some of purchase restrictions a little bit more. And also the central government initiatives regarding urban village renovation, as well as local government purchase of unsold homes and land stores, may step up a little bit. But before the next Politburo meeting, I don't think there is a great chance that the government is going to introduce some serious stimulus for the property sector.
Jacqueline, thank you so much. Jacqueline Rong, Chief China Economist at BNP Paribas, there on her latest take here on the economy and the data that just came through as well. Right, we'll look at numbers coming through. You look at markets very, very shortly here. So we have two screens up here, Yvonne and I. I have the China screen up. Yvonne has the latest shortly on what's taking place in Israel and Iran here. A briefing on the back of the data that's come through so far, and some commentary here from officials indicating that things are largely, let me just look at that takeaway here, generally stable. That the economy does still face many unstable and uncertain factors that they will need to coordinate domestic economic work and also trade exercises there. That is a live briefing taking place in Beijing as we speak.
Yep, subscribers, you can continue to watch that live briefing there at TLive Go. That is up and running here. Let's get you the latest sort of headlines that we're seeing when it comes to the Iran and Israel conflict, right? So according to Iran State TV, in just the last 10 minutes or so, once again reporting that Iran has launched fresh missile barrage at Israel. You're looking at live pictures out of Tel Aviv here right now on the ground. We've already talked about the open hostilities that have been happening from both sides. So this continues to be a very much a developing story. And what we're hearing so far is that Iran's new Israel strike is, quote, more crushing. That what we're hearing from Iran's Iran there in the last couple of minutes or so. So we have seen the retaliation. That certainly is the big question of what they've been targeting, what the next sort of moves from Iran are going to be. As we heard from our previous guest, Dave, Iran still has a few more options on their plate here when it comes to how they can respond to this. But it is quite limited, just given already what Israel has done in the past 12 months or so when it comes to really kind of decapitating their proxies. Also, sanctions really have weighed on the overall economy, too.
Yeah, been able to handicap in the manner at which they can respond militarily, but that doesn't mean, of course, the tail risks are at zero probability as we speak. So just gone 5:11 in the morning in Tel Aviv, and sunrise is expected. And as you can see, some sunlight is permeating through the buildings and the cracks there, as you can see on the screens in between these shots right now at 5:30. So we are a few minutes before sunrise there in Tel Aviv. Plenty more ahead. This is Bloomberg.
All right, you're looking at live pictures out of Tel Aviv here this morning, where we did hear from state TV there of Iran firing a new wave of missiles at Israel. We also are hearing, when it comes to the Israeli military, they also said Iran is firing missiles at Israel and activating air raid sirens in several parts of the country. So on X, they also posted that at this time the Air Force is working to intercept and attack wherever necessary to eliminate the threat. So still a lot going on early this morning in Israel.
Literally still happening. Oil prices, you have Brent, West Texas, you have the Shanghai crude contract coming up on your screen, so still some gains, but we did gap higher, which is past tense, and we've since retraced most of the gains from earlier on. I think one of the points that our folks at MLive have been pointing out, we will need to see a new catalyst to take us to the more highs, but again, we are very a lot of headline risk right now across these markets. Let's bring in, of course, our team right now to get us up to speed on the latest. Bill Ferries joins us, our senior editor, and Mark Cranfield also on the markets here, both joining us now. Bill, let me start with you. A fresh round of missiles in the last hour or so, Bill.
Yeah, we're seeing these waves of attacks going back and forth between Israel and Iran. Israel, from its point of view, is still trying to do some severe damage to Iran's nuclear facilities, which are hardened and underground, and in one case, buried deep inside of a mountain. Those attacks likely to continue. Israel saying it's going to keep trying to destroy the nuclear infrastructure until the threat is gone. So that's a very tall order for them to pull off, given even the advantage in weaponry they have. And Iran, of course, in a very difficult position. It has to retaliate. It wants to retaliate, but it wants to do so without drawing the U.S. more directly into this conflict. So that's a fine balance they're having to navigate. And of course, their military has to deal with a lot of the damage that's already been imposed on it by Israel so far and over the last 12 months in this conflict.
Both sides, too. I'm just wondering, Bill, can both sides afford to be in a very long, protracted war? You mentioned about how Iran certainly has been crippled, just given what we've seen in the past few months with their proxies like Hezbollah, and really have been decapitated in some ways. But can you tell us a bit more about really what's at stake here and how long we could see this conflict go?
Yeah, I mean, of course, Israel has been on a bit of a war footing since those attacks that it faced from Gaza almost 2 years ago now. So its civilian population and its business infrastructure has been really geared towards a conflict, although they have not really previously had to deal with a really extended conflict that could occur with Iran. Iran, of course, on the other hand, has been severely damaged by sanctions over the years. It has a government that is not, even before this conflict, had a lot of strong political support. They've had to suppress protests over the years. The risk for Israel is that Iran's population really rallies around a government that they haven't supported that much in the past. I think Israel's bet is that perhaps some of the damage done here will help inspire people to perhaps overthrow that regime. They say regime change is not their goal, but it certainly looks like doing as much damage to Iran's government as possible is one of their goals. On the other hand, Iran has survived years and years of sanctions and isolation, relative isolation. It's managed to get its oil industry back up and selling largely to China. So both sides have advantages and disadvantages here. On the military side, the advantage really does go to Israel at this point.
Mark, let me bring you in. Have we seen the peak in oil prices for now?
That's the way that investors are reading it for the time being. But at the same, they're also keeping their options open here because you can see how quickly oil can spike. We've seen previous episodes where just because you think that the rally is over, then suddenly you get a disruption to oil supplies. And that's really the key from a trader's point of view, is at what stage do we actually see oil supplies get disrupted? It hasn't happened yet, but if it does, that's when you get a really serious spike in prices. And we won't be talking about $80, we'll be talking about 100, 120, something like that. When we get into that kind of range, then it's very disruptive for bonds, for equities, for currencies. Everybody has to take that into account. That is not the case yet. And for the moment, you can see that markets are fairly sanguine. They're assuming that for the time being, it continues with this tit for tat that Bill was talking about, but we don't get an existential threat to the supply of oil globally. If that happens, all bets are off, because that changes the dynamics across asset classes, especially for bond markets where yields can jump very quickly, make it look very inflationary, and everybody has to take a step back and reassess all their portfolios on that basis.
But Mark, you mentioned we're not quite there yet. In the meantime, though, we're looking at other things this week, right? We just had the activity dump from China. You have the Fed, you have the BOJ. What's going to be top of mind for investors, and what's really going to drive these markets for the rest of the week?
We're going into this week on the assumption that most of the major central banks who are meeting are not going to change policy. There may be an exception in Switzerland. They may lower slightly there. But in general, people are thinking that central banks need more time to digest what's going on. So anything out of the ordinary from that point of view would be a surprise to financial markets. Possibly the risk of the biggest surprise comes from the Bank of Japan. We're going into that expecting no change in policy, but the Bank of Japan keeping the door open to interest rate hikes further down the road. That's pretty much the game plan going into it. But of course, they're also going to adjust how much they spend in terms of buying back bonds in the open market. All of those things are up for grabs. Now, if we see a relative amount of confidence from BOJ Governor Ueda, he could surprise with a relatively hawkish press conference when he comes to meet people tomorrow. That would certainly be a surprise. That is not factored into the market for now. Everyone's assuming that he's going to kick the can down the road and leave the door open, but much further away, maybe into 2026. Anything that's a little bit advanced of that, that's certainly not priced into the yen and not into the Japanese bond market either. So if you're looking for a chance of high volatility this week from a central bank point of view, it's likely to be the Bank of Japan.
Mark, thank you. Mark Cranfield there, our MLI strategist. Also, our thanks to our senior editor, Bill Ferries, both joining us from Singapore here with the latest. In terms of some of the moves and what we're seeing amidst this geopolitical uncertainty is nuclear stocks. So these in the region are climbing after these airstrikes from Israel dealt with some critical damage to a key Iranian nuclear site over the weekend. So as these tensions enter a fourth day, we have seen a bit of reaction here in some of these nuclear stocks. This one, Doosan, for example, up close to 7%. Boss Energy also up close to 12% right now.
Yeah, I guess on the back of this, too, is so we talked about gold. Defense-related equities are also seeing some upside given what's happening in the Middle East. So you have the nuclear-specific ones. You have Japan, of course, and some of the defense-related stocks listed over in Tokyo. And also separately, there is one cohort that is listed over in South Korea, which I think you see on your screens. The Japan defense also coming up on your screens very, very shortly. Now, we will leave the defense and the sort of Middle East story there for now. The other thing we want to point out also taking place this hour was the release of the data number and the activity numbers coming through. And the latest commentary out of the National Bureau of Statistics briefing taking place in Beijing as we speak is that boost to retail sales, north of 6% year on year, by far above every single estimate out there, was boosted by the trade-in program and that extension, of course, going into the month of May. So that's the story for now. Plenty more ahead. This is the China Show.
High quality development continued. 那从主要指标来看呢，1到5月份，服务业生产指数。
Here's some of the corporate stories that we're tracking this morning. Trading firm Jane Street has signed the biggest lease in decades in Hong Kong's business district. It's taking 200,000 square feet in an upcoming development by Henderson Land. Bloomberg has calculated Jane Street will pay rents of more than $3.8 million for 6 floors of a waterfront tower on Victoria Harbour. Santos shares jumped in Sydney after a unit of the Abu Dhabi National Oil Company made an $18.7 billion cash takeover bid for the Australian fossil fuel producer. It's the latest move by ADNOC to expand its global LNG production. The proposal comes as Santos grapples with impatient investors and potential suitors. ADNOC is offering a 28% premium to the closing price on Friday.
Yeah, okay, just to mention, shares of Santos are up 12% over in Sydney. Given, of course, to the point Yvonne was making here, quite a hefty premium to the closing price. But then again, despite the biggest gain in about 5 years or so I think generally analysts are still looking at potential regulatory scrutiny, which could come between the current status and, of course, the deal eventually coming through. Session highs, broadly speaking, and as you can see, we reversed earlier weakness across these markets and Hong Kong about an hour into the session. There is plenty more ahead, including, of course, a look at other movers across the region, plus a special deep dive into this re-emergent sector, this outperforming sector within Chinese biotech. Plenty more ahead here on the China Show. Okay, welcome back. Still ongoing is the economic briefing in Beijing following the release of generally stable numbers, some missed estimates, but the retail sales is really catching the attention right now of markets. And since that point in time and the massive beat there of more than 6% growth in retail sales because of the trading program, we are getting markets reversing from the lows. In fact, we're now looking at benchmarks at least trading near session highs. The context there, the trading program did boost retail sales in May. That's according to the National Bureau of Statistics.
And just moving away from overall the economy, I mean, obviously we've been talking a lot about consumption and the like here, but really there seems to be one particular sector that's really driving this market here right now, and that's biotech, that continues to see gains almost every day now. You take a look at how these biotech stocks are really shaking off this 4-year slump to be one of the hottest performers in the region this year. The Hang Seng Biotech Index has surged more than 60% since January. Amid this investor enthusiasm, some are calling almost a deep-seek moment for biotech. Let's bring in our Asia equities reporter, Sami Cha, to tell us what's really going on right now.
Yeah, it was an unloved stock, unloved sector for 4 years indeed, since 21. And this year we're seeing that blistering rally. And a lot of the traders are comparing it to what they've seen in the tech space earlier on. So, and then they're saying like it's come down to that 17% gains for Hang Seng Tech Index, but we're seeing that 62% this year. So, and they're saying that there's more upside going forward. And a lot of pretty much all the big funds that we're meeting who are investing in China are saying that they're turning more bullish on Chinese biotech stocks. And all of this goes back to, of course, the mega-sized out-licensing deals where a lot of these global MNCs go and look for the good assets in that biotech space to go and actually, start actually their pipelines through those Chinese biotech innovative drugs. And so a lot of the traders are saying that it's no longer an emerging story for Chinese biotech. It's now reshaping that global biotech space. And we've seen that with Pfizer deal, them offering $1.3 billion upfront payment to 3S Bio. The shares are up close to 300% this year. Ramgen is a similar story there, antibody drugs maker. And all of this points to how the talent is actually coming back to China because of that U.S.-China trade deals stalling a little bit. And so a lot of that may be a bad story for some of these Chinese companies, but the actual talents, high-profile scientists are going back to China to actually, make these drugs. So,
interesting.
Yeah, one of the analysts that you guys quoted in your Taking Stock piece today says the science is real, the economics are compelling, and the pipeline is starting to deliver. Sang Mi Cha and the team, their fantastic piece, by the way. You can read about that on the Bloomberg terminal today and also on the website. Right. So certainly one company within this space that has done well when you look at the stock over the last year or so, it's coming up on your screens very, very shortly, is Innovent Bio. And yeah, there we go. I mean, suffice to say, the stock maybe has gone up. I'm not sure. It's down a little bit, though, today. Let's bring in fact, exclusively joining us now is Samuel Zhang, the Global Chief Business Officer at Innovent Biologics. He's in Boston right now to attend the Bio International Convention. Samuel, thank you so much for joining us today. And certainly there's a lot of excitement about what you guys will be presenting this week and what's going on in the industry. Let me just get started by asking you, a lot of analysts are calling this the Chinese farmers' deep-seek moment. What do you think is changing right now? What's going on in the industry, and why do you think we're in this situation right now, this very positive limelight that the industry is undergoing?
Thank you for the opportunity. It's a great pleasure to be here. I think it's not just happening right now. What's happening now actually happened probably 10 or 15 years ago, and there are a big emphasis on innovation. And a lot of innovation is currently happening in China, and those it takes time, as we know, in drug development takes several years to get assets into clinic, and then take 7 to 8 years to get approval. So it is really the work from the last 10 to 15 years now really final yielding results. And ourselves, our pipeline also is maturing, and we have 14 presentation at the ASCO happened just 10 days ago, and we had 8 oral presentation at ASCO. We estimate that's like 2% of all ASCO oral presentation, and specifically our next generation IO breakthrough therapy, we believe had 3 oral presentations, and we're very excited to see that this come to fruition.
Yeah, I mean, a lot of excitement there on what you could present. Tell us a bit more about your obesity drug launch in China, Samuel, because obviously you do have mazdutide. I hope I'm pronouncing that right. Also, some earlier stage obesity drugs that they have. Tell us what's really in the pipeline and maybe specific launch dates that you're looking at now.
Yes, we're, Innovent has been very, very successful in the last 14 years. We actually launched 15 medicine in those last 14 years. I think that's quite a record. And we have grown our business for the first year, actually become profitable last year. And we have grown our sales to more than 9 billion RMB, and we're targeting to grow to 20 billion RMB by 2027. And in the past, our key growth driver was oncology. We have a market-leading anti-PD-1 in China and a lot of other innovative oncology products. We're looking to expand into cardiovascular space. As you mentioned, mazdutide is first-in-class, a global first-in-class, launched in China, has a really big potential in diabetes and also obesity. We're looking to launch the drug this year.
Okay, I was wondering if you could be more specific, if you have more information on when the launch is. Are we expecting that to still come this month? And if you have a date, that would be wonderful if you could tell us when that actually launch will be.
Well, I think, as you know, in approval, it's always hard to predict exactly when the regulatory agency will give you the green light.
Understood. Okay, Samuel, I guess just to pivot then, in terms of the pipeline, you have 3 new drugs under regulatory review. Could you give us specific or rough timelines of when or what the business is assuming for those 3 products?
Yeah, we have not only cardiovascular, but also we have IL-20 immunology drug, and we're and we're also actually very excited about a thyroid eye disease drug that we just launched in China, and it's really helping a lot of patients. And this is like in patients who are under-recognized this kind of a disease burden in China, and there are 70 years that patients don't really have any treatment, and now they have option. And in China, we are launching a drug that we are pricing at 5% to 10% of the price of the Western countries. So we're really bringing very affordable medicine to millions of patients in China.
Yeah, the pricing strategy certainly is interesting. That's certainly an advantage for you, Samuel. I'm wondering, when it comes to the likes of mazdutide, there certainly are a lot of competitors out there. You think of Novo's Ozempic, you think of what Lilly is doing. How do you compete with those big names?
Well, like what we did in the past in oncology, we have been very successful using the anti-PD-1 as example. And the anti-PD-1 actually, we are competing against the big boys like Merck, like Bristol Myers Squibb, and we end up winning. We have the biggest market share in China, so we think that we're going to duplicate that success in the cardiovascular space.
Right, and Samuel, do you have a specific market share that you let's call it, wish to target as you take on those two?
Well, we obviously are not going to. I guess we don't really have a number to share at this point.
Sure. Fair enough. And we really look forward to talking to you once we do at least have some momentum there after the launch. Tell us, you're in the States now, and we understand that you're presenting at a conference coming soon as well. Could you give us a flavor of a preview of what you're about to tell the audience there?
Yeah, so we are here. Bio is one of the biggest partnering events in the world, and there are thousands of companies are here to find partnership discussions. So we're here to discussing with various companies about potential partnership. We have a huge pipeline. We have more than 30 assets in our pipeline. We're producing 6 to 8 assets into clinical testing every single year, and we have 25 clinical stage assets. And we're using the China speed not only from research but also in clinical development. And our IBI363, the PD-1 IL-2 bispecific, where we had 3 oral presentations, and we think that really represent the next generation immuno-oncology therapy. We are developing in very fast speed and to demonstrate a clinical proof of concept and de-risking it. And we're seeking and we're bringing tremendous value as a potential partner. So we are here at Bio to have a partnership discussion and look to really bring our asset to the global market.
Samuel, it's great to have you. Thanks for staying up with us, and good luck to you guys and your team in Boston this week. Samuel Zhang there, Global Chief Business Officer at Innovent Biologics. And subscribers can also watch us live and take a look at some of the past interviews on our interactive TV function, TV Go. Dive into any securities or Bloomberg functions that we talk about and become part of the conversation and send us instant messages throughout the shows and mornings. Check it out at TV Go. You are taking a look at live pictures out of Kananaskis, Alberta, and Calgary here this morning, where Trump's Air Force One is currently landing in the country here ahead of that G7 summit. Our very own David Gura has been on the ground there, just talking about just what the backdrop is leading up to this big summit. Obviously, it's really going to be about this Middle East crisis between Israel and Iran, and the summit's focus really has been on not just the geopolitics and whether we get any sort of consensus coming through from the G7 on this, but also when it comes to trade deals, right, with over a dozen leaders looking to protect their interests and avoid U.S. tariffs as we count down to that tariff deadline pretty soon. So we'll see if any sort of trade deals come through here during this meeting. But yes, they talk about how remote this location is, right? Banff is certainly, but as David Gura told us, the meetings span all across Calgary here, in many ways as a way to be more of a neutral ground, and maybe more discussions can play out.
Yeah, there we go. Air Force One in Calgary, and we'll get you guys up to speed. The latest headline, according to what we're seeing so far, is the U.S. president will be meeting, of course, with Canada's Mark Carney Monday, 9 a.m. local time. Okay. Let's just pivot and have a look at other geopolitical stories that we're tracking at this point in time. Now, multiple cities in the U.S. saw protests opposing President Donald Trump's administration as he held a military parade on his 79th birthday. Nationwide demonstrations displayed the banner of No Kings to denounce what they say are Trump's authoritarian tendencies. And the protests were largely peaceful, but saw sporadic violence, including a shooting in Salt Lake City.
The Washington Post is reporting that the U.S. is considering restricting entry to citizens of an additional 36 countries. An internal memo covers 25 African nations, including key U.S. partners Egypt and Djibouti, plus countries in the Caribbean, Central Asia, and several Pacific Island nations. The move would mark a significant expansion of the travel ban announced by the Trump administration earlier this month.
Now, India is ramping up inspections of Boeing 787 jets. It's after last week's crash, of course, out of Air India that killed 241 people. Now, the safety checks will cover things like fuel, cabin air, engine control, and hydraulic systems after the Air India plane appeared to lose thrust as it seconds after takeoff. Let's bring in PR Sanjay joining us out of Mumbai this morning. Sanjay, it appears there is, as expected, some frustration given how slow recovery efforts have been so far.
Yeah, I'm at the accident site, in fact, and the Aircraft Accident Investigation Bureau has launched a detailed investigation, and the U.S. National Transport Safety Board is also conducting a parallel probe under international protocol since the aircraft is American-made. And the Indian officials have confirmed that the flight data recorder and cockpit voice recorder have been located and secured. And we could see Air India CEO Campbell Wilson visiting the crash site and meeting some of the immediate families members and who lost lives. But of course, there is a widespread information that the immediate families are not getting sufficient flow of information. And while India's Gujarat State Health Department has deployed over 855 health personnel, including 100 healthcare workers at the trauma centers where I am there, as of now, total 250 blood samples have been collected from relatives of passengers and local residents affected by incidents. The state government has also taken some steps to ensure the smooth and timely disbursement of insurance and compensation claims to the legal heirs of the deceased. And a joint cell has been set up at the hospital to facilitate insurance claims. New India Assurance has been designated as a lead insurer on behalf of General Insurance Council, while HDFC Life has been appointed as a lead insurer for the Life Insurance Council. And we could see a lot of Air India senior officials camping at the trauma site. And Air India has said it has established contact with 400 families and reached out, and they are offering all sort of help, but the families are still not very happy with the kind of the flow of information and the delay of handing over the dead bodies.
Sanjay, you can tell us a bit more about, you mentioned the regulators, you mentioned what's been going on the ground. These inspections, they're going to be carried out for the next 2 weeks or so. What is exactly our investigators going to be looking out for in particular?
Yeah, now, the site is cordoned off. There is huge security, and all state agencies and central forces are helping. Aircraft Accident Investigation Bureau, as I already flagged, the U.S. National Transport Safety Board is also conducting a parallel probe, and officials from Air India and Boeing are also on the site, and it has been monitored by India's Civil Aviation Ministry, and DGC, the Director General of Civil Aviation officials are also present. And now, since the flight data recorder and cockpit voice recorder has been secured, and that has been examined, we are hearing that it will be taking at least 3 weeks to get clear that idea. And yesterday we could see India's Principal Secretary B.K. Mishra visiting the site and assuring all sort of help. So it's a developing story. We are awaiting for more details.
All right. Sanjay, thank you so much. PR Sanjay there, Bloomberg Conglomerate's media and telco reporter. He is currently at the crash site and will bring us more reporting throughout the day. Thank you so much, Sanjay. We're taking a look at when it comes to live pictures coming through in Beijing with the National Bureau of Statistics underway here after what we heard from that activity data dump. We're basically, beyond just the consumption story and the retail sales that were a beat, most of the sectors were, and what we saw in the data was actually a miss, right? So what we're hearing from MBS is that the complex external environment impacted the China labor market, and the economy expected to see steady progress in the first half. When it came to prices and where inflation is, China to promote the appropriate recovery of prices, and they remain at this point generally low and affecting businesses as well. Those are the latest lines coming through from Beijing.
Yeah, the jobless rate coming in, I think, to the point they were making on the labor market at 5%. That's for the month of May, and yet trying to distill.
Still better than expected, though. I think it was 5.1 was what they were expecting.
Yes, it did come down as far as that specific metric is concerned. And markets started off the day on fairly weak footing, reversed most of the losses. In fact, at one point this hour traded at session highs and above that zero line, and have since actually then retraced slightly to the downside. We're about 90 minutes into the cash market session. We'll leave that there for now. Plenty more ahead. This is the China Show.
All right, bringing you live pictures out of two places here right now. Obviously, Tel Aviv, that was the earlier pictures that we saw of these missile strikes that were happening there, with state TV confirming, of course, Iran did respond this morning. And then there you go, Air Force One landing in Calgary, Alberta this morning ahead of this G7, and President Trump set to embark and then land on Canadian soil. And really, he's going to be the center of attention at this G7 summit at a time when, you know, there's a lot of talk about this is something that he doesn't want to really be in right now, right? And amidst, of course, this spiraling conflict in the Middle East, which is another test of the G7 unity, Dave.
It was supposed to be on trade, and you know, as our colleague who is there, of course, covering this, and there we go, the U.S. president is just stepping out of Air Force One as he arrives, and he is expected to first, a bit later on, meet at 9 a.m. local time Mark Carney. They were supposed to talk about trade. I would imagine they'll still talk about trade, but certainly the attention will be on what's being traded in the Middle East, which is projectiles. And just earlier on, of course, this fresh round of missiles launched from Iran into Israel, and we've showed you some pictures of that as well. But yes, some live pictures coming through here out of the U.S. president.
Yeah, and before he landed, they did mention about those canceled talks with U.S. and Iran have been canceled in Oman, and he was still showing a sense of confidence that, you know, a deal could be reached as well. Obviously, there's going to be a lot of talk about whether the G7 can demonstrate a sense of common purpose over this conflict between Israel and Iran that began. So certainly there's a lot of talks about that. And then, of course, as David Gura, our very own correspondent on the field there, is talking about trade deals, right? And that was supposed to be the focus, but we'll see if anything comes out the next few days.
Yeah, because there seems to be, and I think, you know, our story actually highlights the fact that, well, not the fact, that the expectation, let's put it that way, sorry to rephrase that, not expected to put out a joint communique this time, given the differences in the gap between, well, attendees on several major inputs, right? Whether it's this, trade, climate change, AI, for example. But that said, we are looking to, hopefully the encouraging side there is to expect a sort of a positive tone coming through as well.
You have leaders from Brazil, South Africa, India, South Korea will be there to try to protect their own interests. We also have Ukraine's Volodymyr Zelensky looking to shore up some support for his nation in his war against Russia there, despite Trump being ambivalent about the whole conflict in that area. But we talked about the location, right? It's a very remote location where we are. And basically inaccessible to protesters. It's going to give leaders a chance to really meet with Trump, maybe on a neutral turf in some ways, and really avoid the whole glare of cameras in the Oval Office, where he usually is in control and playing to his domestic audience. So neutral ground. Hopefully we get some outcomes here, Dave.
There we go. We will leave these pictures there for now. Before we go, just very quick check of oil prices, and certainly one of the assets that was very much in focus out of the gates. Gap higher in Brent, and what's this? This is our oil stocks. Okay, yeah, don't pay attention to this. We're looking at oil plays right now, coming off highs a little bit. And of course, as it pertains to Brent, we are still higher for the day, but certainly nowhere near levels at the peak that we had on Friday.